One of the really popular reasons for refinancing is debt consolidation. House prices have gone up so much over the last couple years. That means that most people are sitting on a ton of equity, but it's trapped in their house. So maybe you're rich, but not in your bank account. You're rich in your house. What do you do with that? How do you use it? So people might think refinancing is that so you can lower your interest rate or you can save money, but you can still save money even if your interest rate doesn't go down. So that's where the debt consolidation comes in. So a couple different things I've been working on. I had this client come to me the other day and her interest rate is 3.375, which is a great interest rate. If she refinanced, her interest rate was gonna go to 5.5%. 3.375 to 5.5 maybe sounds like a bad idea, but when we looked at why she wanted to refinance, she wanted to pay off $50,000 in credit card debt. She needed to get rid of it. Making the minimum payments was never gonna pay off that $50,000 in credit cards, and it was just kind of hanging over her. So let's see how using the equity in your house can pay off that credit card debt. So we ran all the numbers, and she's gonna take $50,000 out of her house. Remember, she's gonna go from 3.375 to 5.5%. But by eliminating that credit card debt, she was knocking out, I think her payments on the credit cards were like $1,200 a month. And so her mortgage payment went up when I looked at what she was paying for her mortgage plus the credit cards versus now she just had a mortgage payment. She was actually gonna save $700 a month. $700 a month is a lot. Imagine what that could mean. That's kind of a game changer for most people, having an extra $700 a month. So even though her payment was going up, she was still saving. There's this idea of a blended interest rate. So say her mortgage was at 3.375, but that $50,000 in credit cards was at 18%. Say that's kind of the average right now for credit cards. So when you blend that 3.3 and that 18%, she was truly paying on all of her debt more than 3.3%, and it actually happened to be less or more interest than when her mortgage was gonna go up to 5.5. So don't just focus on the interest rate or the number. There are ways that you can save money by refinancing even if your interest rate goes up. Definitely case by case scenario, but those are really easy things for me to work up. So if you have debt and you have equity, let's see if a debt consolidation might be able to help you. I'm Amanda Ray with Guild Mortgage.